Good evening, ladies and gentlemen. The time is 3:32. Today is the expiry. Today is the 17th of Feb, and what an intense expiry. It reminded me of how things used to be back in 2020 and 2021. And like the level of choppiness in the expiry was on a completely different level. It was very almost fun to see that you're going to get stopped out on something, but still because of risk management you have to get stopped out on it unless you're a scalper. See, this is beautiful for scalpers because look at the size of these candles. It is absolutely like scalper paradise. And yeah, anyway, let me get into what the trade was today, how I managed it, and how I kept my mark to market green the entire time after the first half. First half, my mark to market slid by almost 8-9 points, and in itself I thought that was a very big achievement for me. And after that, basically had to manage into all the other stops. That I got stopped every which I think minimum I would have got stopped on 10 positions, 10 particular legs, which I would have, I had no option to see this market. You have to take stops. You take stops and you manage despite those stops. Yes, there's some high amount of premium, but if you want to get that premium, you will have to work. We opened here. Gap up, first of all, crushes the put option. The range I was working with is 17,500 to 17,200, which is why to play it safe, I shorted the 17,550 call option and 17,150 put option. So my idea was, okay, let me stay relatively far from there. I will then figure out into the day what to do. I got 16 rupees for this. Now, what happens after the open? We make this stiff down move and absolutely crazy kind of a spike on the put options. This put option goes from where I entered it about 6 rupees something, right? Just in the first three candles, goes from some 6 rupees something to 40. Now, what are you going to do into this? How are you going to keep your mark to market balance? Nothing. Very aggressively shorted from 17,550, moved to 17,500 call short, 17,450 call short, 17,400 call short. And the idea was that, okay, from here, if this particular level breaks, then I will move my calls to 17,350 as well. But basically, after this particular spike, this time the IV didn't spike as much. So if you see, the puts didn't spike as much the second time, which is why whatever my calls gave up, I was able to hold on. So yeah, so you see, it didn't take out this high. So the second time also it spiked, but it didn't take out this high. And because it didn't take out this high, I was able to hold on. And plus I had taken a lot of credit from my call side. You can go through my order book in detail. It's in Telegram. So that was actually keeping my mark to market balance. It was down close to 10 points at one point. So I was in 2 lakh loss at that point of time. Now, what can you do? You can't do too much, because from here, where I'm short 17,400 calls, I've shorted them at around 20 rupees or something. Had to take a stop at 30, move them to 17,450. So at 17,450, I shorted at 14. We continued to head higher. And this candle, this candle doesn't look very bad, but this particular candle, it spiked the calls from 22.5, which was my stop loss, from under there to 27, because we were taking out 17,400, went till 17,420. Here I decided, okay, just risk off on the calls now, and moved up my calls to 17,500. Okay, all of that is fine. All of this plays out. You have this candle here, which breaks. Then the puts I was sitting on, by that time I'd moved up my puts also to 17,250. Puts I was sitting on 17,250, immediately had to get stopped out. Moved to 17,200, had to get stopped out there as well. Moved to basically back to 17,150, my initial put strike. So and then into like this pullback, and into the last half an hour, there also I got stopped out. I shorted this 17,300 put option for 2 rupees and squared it off for 5 rupees, 5.9 rupees, 6 rupees. Yeah, so that cost me around 4 points. Now also moved down for basically about 1.5 points, moved down my call to 17. This thing. So yeah, so last half an hour also into averaging also I got stopped out, and then only it went to 0. So today is the day that you have to take stops. Like if you trade the way I do or do anything similar like strangling, straddling, you have to take stops. There is so much premium. At 1 o'clock, there's 80 rupees premium in 17400 straddle. That 80 is not going to go in a straight line to zero, even if it were to go to zero. So there will be moves. So at that point, you have to anticipate it's going to move in some direction or the other, and you have to take stops. You might know, like even towards the end, this 17300 put, I mean, before averaging, just 5-10 minutes before averaging, went all the way up till 25. You can't be short and just sit on it and say, yeah, it's going to go down. Doesn't work that way. Yes, I mean, if you see yesterday, before all the randomness played out, there were a lot of positions building at 17300, and plus minus 17300 would have been a good estimate of the expiry. But I mean, after this second half move, you would not expect that. This market is very difficult to trade. It doesn't look like it's moved much from open to close, but because of the way the rate at which the moves are happening, the size of the candles, the way people are panicking. First, I mean, look, the calls that went down all as low as 15 went up above 50. So you had puts that basically went 6 rupees put into 40 rupees. It's gone up like 6 times. And then you have call which has gone to 15 rupees, go to 50 rupees. It's just all over the place. And on such days, you just have to keep getting stopped and try to look at the chart. And especially in the past 3 days, most of the time, I trade with premium and I work off of premium. The market has become so unpredictable. Market itself doesn't know how to price certain options. At times it puts on an insane amount of price, gives up that price, keeps going back and forth between the two. So there you're pretty much better off looking at specific levels, right? So like what was my 17400, obviously round figure, had to risk off. Here, why did I risk off? Because this was the opening gun. So this is where this was the first point where I risked off, right? So just as we were taking out this, here you have to take the stop loss, because as soon as, if we keep heading higher from here, the calls are going to absolutely explode. So you have to take call stop loss here, you have to take put stop loss here, you have to once again take put stop loss here. If you don't, and you just sit and you say, okay, it's gonna do something, it can work out very, very badly. Anyway, I hope you guys had a good expiry. These kind of days hopefully will pass, but the only thing you can do here is take stop losses, and anyone who's taken like stop losses and gotten out, great. Like as long as you haven't hurt your account on a day like this, excellent, because there's not much you can do. There's nothing that you can do when this kind of chopping, it's not even, it's just insane volatility in a limited range, right? So yeah, anyway, thank you so much for watching. I hope you had a good expiry, and with the constant going up of India VIX, I would suggest, and people will say, oh, it's going to come crushing down eventually. You just don't know that. As of now, I would say keep little to no positional exposure, if at all, and even if you are, keep them all hedged. Thank you so much for watching. I'll catch you tomorrow. Take care.